What's up, guys? It's August 27th, 2024. Hope you guys are doing good. Do a breakdown of the E-mini. Sideways day today. Another range bar. Looks like it had a little more tail than body. Daily chart, 45-minute. We have 5 pushes, so somewhat breakout mode on the 45-minute chart. Ooh. Yeah, so a lot of overlap. Days are getting kind of harder to trade. We went from having a lot of volatility to this kind of volatility. Where are we yesterday? Yesterday we had a broad bear channel. Bulls had a gap up. Bears reverse it, break below the EMA, and we channel lower. 2 seconds. Yeah, so it was a channel here, and oh, let me extend that. You can see bar 3 was kind of the low of the channel. Today's bar 3. So if we play this bear channel from yesterday, trading at the lows, bulls are buying it into the EMA, we can go more sideways. So gap down. Let me delete these. Let me know what you guys think about the 10-minute versions versus like the 15-minute. I'm getting more people are telling me to keep them around 10 minutes, so I do want to go a little bit more into detail than just 10 minutes, but just let me know what you guys think. So you guys saw this bottom of the channel line, we had support, bar 3, gap down, bar 1, bear bar, good for the bears. Bar 2 is breaking up below bar 1, but we're at the channel. Bar 3, bulls are showing a reverse. Leg 1, pull back leg 2, pull back leg 3. We could have, and these tails are also bear legs, so excuse me. Yeah, these tails are bear legs, but they're bull candles. So we have 3 bull bars, and we have a micro gap or 0. It might be a 0 high gap. The high is 620. The low is, yeah. So there's a tick. It's a tick gap. There's one tick here. So bulls are putting in a gap. That's great. Bears have this gap, but bulls are trying to close it. We're going more sideways on the EMA. EMAs are lining up here. I think bulls and bears are both getting trapped. However, we have 2 pullbacks by the bears, so bar 6 is an opposite bar. Bull leg, bar 9, opposite bar. Bar 10, second entry long. Bar 8 being the first entry. Well, yeah, bar 8 being the first entry because this goes above that high. Pull back, and that goes above the high of 9. Breakout. Bulls want to keep a gap open, and there is a gap here. That's good. It's a breakout gap. Gaps mean traders are getting trapped. Bar 11 is bad follow through. Excuse me. Bar 13 bad follow through. Bar 14 and 15 starts to go more sideways. The closures are bad. They're not breaking out far above 13's high. They're starting to go more sideways. We're trading above yesterday's channel. Bears definitely want to reverse it down. More sideways price action. 18, 19, 2 good bull bars. Bad follow through 18, 19, 20. Bad follow through 20. 21's first bear bar. Look at the price action between 19, 20, 21. 18 and 19 are somewhat climactic. It's at the end of a trend, 3 legs higher. Leg 1, leg 2, leg 3. So we have a climactic price action. We have bad follow through. Now we have a bull bar, a bear bar. We don't have a lot of bear bars, but we were kind of, it was like 60-40 bears yesterday. But bears started a channel with the high of 21, and they want to break out below the EMA. They get the first tag of the EMA, but with multiple gaps open, bulls buy that. They buy the close here and have to hit out, and now bears got a gap open. Start to sell off and gets climactic, and this bar is testing this breakout point here. Apex. Excuse me, the middle of this range. I don't know why I said apex. So we have if this was the whole range, we're at the lows of it. Because now we've had 3 legs, so we've had a breakout, we've had 3 legs, and now we're ranging. A little more sideways. Bar 30, bulls are going back for a breakout, but with big down, big up, it's more sideways price action. Now we have 3 pushes higher, leg 1, pull back, leg 2. This was the third. Something like that is what I was looking at. No follow through at highs for the bulls, which is bad. 3 bear bars after a bull bar. It's not good if you're looking for a bull breakout. You don't want to see that. But although that is not the best price action, it's still all within this range. So it's not the worst, and they have tails, but it's just not something you'll see in a bull trend. And this is also damaging the bull case if you're looking for a bull trend. Bear flag, especially top bear flag breaks out and gives the bears leg one pullback like 239 is low, and bulls start to reverse higher. The market's going more sideways now. I got pretty chopped up here. 3 bull bars looks like it could be good enough for a second leg. And there's a gap here. We go more sideways again. 48 strong bar. It's kind of big at the end of the trend. So like one pull back like 2. We're right. That's my dog. 48 tail is testing the breakdown point from this morning. We go more sideways. We're not making a new high. We get 4 bear bars in a row again. Strong bull bar, 2 legs down for the bears. Strong bull bars, but more sideways price action. The market goes into a tight trading range. This is I got kind of chopped up around here. So yeah, it was the days of bull bar, but I think it had a lot of range bound price action. Hope you guys are doing good. Keep it a little bit short for this week. Let me know what you guys think. Let me know how you guys are doing. I will talk to you guys later. Thank you for your support. Bye.